Hang on to your hats, folks. This might be the most important EV car launch of 2022 as Xpeng Motors surprises us all with a $44,000 SUV competing with the BMW X5. Not only has Xpeng launched an SUV with the fastest charging rate of any EV in the entire world, but they've also done this while supporting Level 3 and Level 4 autonomous driving hardware in one of the world's first fully autonomous capable vehicles. Trust me when I say this, but this vehicle is on track to be one of the most revolutionary EV products if it is successful, and Xpeng stock right now is simply not reflecting this massive opportunity. In this video, I want to go over exactly why the Xpeng G9's recent launch has increased my conviction in Xpeng Motors and how I think this company will survive and weather the recession that China is currently going through. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So, to start things off, let's look at the specifications of the Xpeng G9 to understand what makes this product launch so special out of the entire lineup of Xpeng. You see, unlike the P7 sedan and the P5 compact sedan, the G9 is Xpeng's first SUV, which means that profit margins on this vehicle should be much better than any other vehicle this company has sold before. And as we all know, given the massive growth adoption we've seen of Xpeng's vehicles, this might turn out to be a profit machine for the company in 23 and 24. And not only that, the best part is that this vehicle hosts some of the most advanced technology we have seen in electric vehicles to date. Not only does it include an 800-volt charging architecture with Xpeng supercharging stations in China, which can charge this vehicle to a 200-kilometer range in just 5 minutes, but this car also has one of the best standalone ranges out of any EV in the world, and also one of the most capable advanced driver assistance systems out of all cars sold in China. What this means is that Xpeng can launch software updates which can allow the G9 to perform level 4 or even level 5 autonomous driving on China's roads, which is going to be a first for the country. And as we all know, China wants to be a technology leader when it comes to autonomous driving and artificial intelligence, which tells me that Xpeng has a very good tailwind in its favor for developing and commercializing this R&D technology. And it clearly seems like the Chinese consumer understands those amazing features they're getting for such a cheap price at 44,000 USD, which has resulted in very high customer demand for this vehicle in the pre-orders before its deliveries in October. And given the fact that the G9 is already planned to be sold in Europe in 2023, this could become the company's best-selling vehicle over the next 12 months, which should result in some big profits for this business, who has already proven its high ability to scale up and execute at a high level. And the fact that the G9 is cheaper than some of NIO's and Li Auto's latest flagship SUVs just goes to show you how efficient Xpeng is in their production capability and how they have strategically positioned themselves to target the more niche audience after already having created a good market with the P7 and P5 sedans. And the crazy part is that the G9 is even cheaper than the Model Y, which is obviously a mid-size SUV, not a full-size SUV like the G9 itself, which means that there is a lot of market opportunity ahead of this company in 23 if they can continue to scale and produce the G9 effectively in China, and also obviously potentially scale it out to Sweden and Norway in Europe. Now, if you're an investor in Xpeng Motors, you might be wondering why has the stock price been performing so poorly when they have just launched one of the most advanced EV SUVs in the world and the business fundamentals have simultaneously improved so much. And although I do hate to say it, I think the answer is I have no clue why the stock has been going down so much, because it looks like the market is driven by short-term fear around the macroeconomics of China. But the good thing is that it's not like we've not seen this irrational selling anytime in the past. We saw this happen in March of 2022, which is also a time that I was a significant buyer of Xpeng stock. And this also happened in May of 2021, which is also a time I took advantage to buy the dip. And you know what's the biggest similarity between all three of those time frames? The stock market was purely driven by macroeconomics and not the fundamentals of the business. Now sure, macroeconomics do affect the short-term profits and revenues of these businesses, but if you're a long-term investor, the short-term should be of absolutely no consideration to your investment thesis. I am going to be holding the stock for a minimum of 2 to 3 years because that is when I can actually experience the massive revenue growth and profit expansion opportunity behind their latest launches. And I can assure you that there is no multimillionaire out there that will disagree with me when I say that recessions are the best time to buy stocks because that is when most of Wall Street is panic selling when the business is probably not doing that bad. And the reality is that China is indeed in a recession, and they're actually expected to recover from that recession as COVID-19 becomes less of a scare, even though in 2022 their growth is going to be very, very low. And the simple reality is that even though there's a lot of competition in China from NIO and Li Auto, the market is simply way too big to be only dominated by a few handful of players. There's going to be plenty of opportunity for different companies to launch new types of products, and in my opinion, innovation is always going to win out, which is why my bets are on Xpeng Motors when it comes to dominating the China EV space over the next decade. Even though companies like Li Auto are still struggling with short-term supply chain issues, as somebody who works in the electronics industry, I have to say the supply chain problems are easing significantly and inventories are starting to build up. And it looks like Xpeng Motors has already figured out one small part of that problem. And that comes in the fact that they have recently diversified their battery cell supplies from CATL, which means that now they have more opportunities to diversify their battery pack manufacturing and also potentially reduce costs from these very monopolistic suppliers. And the best part is that Xpeng is also working with smaller Chinese startup suppliers to be able to test out more advanced technology with them, which is obviously more difficult to do with bigger and more established players like CATL or Panasonic. And as we all learned from Tesla, the company that can dominate and manage its supply chain in its own market and region is going to be the one that's going to be able to best navigate profitability in the short term and outdo its competitors. And given the significant amount of cash that Xpeng right now has on the balance sheet, there's very little doubt in my mind that they'll be able to not survive this recessionary headwinds that we're facing in China. Yes, they have around $30 billion in debt, but they also have around $70 billion in assets to balance that out, with their total current assets significantly outpacing the total current liabilities at $22 billion versus $43 billion, which is obviously the sign you want to see for this company to be able to go through the recession in China. And by far the most exciting part is in the income statement, where as you can see, revenue for Xpeng Motors has gone up significantly over the past 1 year, even though quarter over quarter it has started to stagnate. But the thing is, we have seen this happen in the past, just like we saw from 2020 to 2021. And as you can see, their operating expenses have been going up not nearly as much as their top line revenue, which is already leading them towards a potential break-even operating margin within the next 3 years. And even despite the supply chain issues, their gross margins have stayed relatively stable over the past 12 months, which will again help them slingshot their profits when the situation in China starts to get for the better. But obviously that is just my take on the situation around Xpeng Motors, so let me know your thoughts down in the comment section below.